Okay, everyone, welcome back to the Price Action Labs YouTube channel. So let me start off by asking you one question. If you have a job and you want to quit your job and you need a simple edge to do that, how are you going to do that? Well, the way I do it, or the way I did do it, was through a 4-step mechanical process, right? It doesn't include ICT, smart money concepts, indicators, or anything like that. It simply is price, time, and volume. Those are the only 3 things you need. So it doesn't matter what type of trader you are. Scalper, swing trader, ES, NQ. This even works on Forex, right? So if you are looking for a way out, or you just want a strategy that's repeatable, that's systematic, that you can use at work to generate profits to then escape your job or escape your work, this video is going to be for you, right? So I'm talking specifically to the person who's struggling, who wants to quit their job and wants a way out, right? This is what the video is for. So let's get into it. So this is the S&P 500 or ES futures, right? So I'm going to be breaking down a trade which was just over $1,000 or $1,000 using the premium footprint execution process. Now, specifically with this video, I'm going to be diving into one specific part of the model, right? So for those who've been following me for a while, you will know that I actually have an entry model which I call the Bolt Breakout Blueprint, right? BOLT. So it stands for break, optimal retest, liquidity absorption, and then I pull the trigger. So in this video, I'm going to specifically be diving into that. Right, so I'm going to be diving into a setup I took, right? So what I want every trader to understand is that when I approach the charts, I do not approach the charts randomly, or I do not approach the charts based off the news, based off any indicator, based off any one thing as a whole, right? I have a series of concepts that I put into an SOP checklist. And in this video, I'm going to be breaking that down. So the first SOP that I want to share is the one I have here in school. So this was a trade I took. So it was a solid start to the week, right? So we had about 2R, MES, 23 contracts, went long, right? Risking, as you can see here, the R multiple is important. So risking about, it says here $708. So this was actually trailed up to about $650. So I risked about $650 to make just over $1,000. So about a 1 to 1.8 risk reward, right? So the trade, I kind of closed most of it at this area here. But I want to kind of break down the entry model that I use, the specific entry model, and I want all of you to understand the process. So let's dive into it. Right, we want to be using our SOPs and our checklists in the right order. All right, so if we break this down, let me just quickly break this down. Here we go. So pre-market plans are very important. Here we are. Right, here is the exact standard operating procedure, or SOP, that I use in the markets, right? So this is the New York session, right? The first 90 minutes, right? If you are trading a job, you actually want to spend the least amount of time on the charts. Now, I say that as somebody who has been through the process, and what I'll say is that the more time you spend on the charts, the worse your overall day gets, right? So your trading suffers, your work suffers, your mind suffers, your life suffers. So the easiest way to actually trade alongside work is to be very, very strict with your SOPs and your checklists. And so every video that I use and all the frameworks that we use at Price Action Labs comes down to this one basic concept, right? So the New York session, I only trade from 9:30 Eastern to 11, right? So the most important part is actually from 9 to 9:30. It is the pre-market plan, right? So the pre-market plan, I want to be understanding, I want to use the 4-step process, the 4-step positioning process to find my levels. Then I want to focus on market profile. And so I'm going to be breaking this down in terms of mainly the market profile. So I had a couple of levels on ES futures. So this was a level, this was a level. And so my plan was basically trading breakouts, either from 1, or if we got to 2, you know, we can take breakouts from 2. Now, the actual breakout was this here. So in this video, I'm going to be going over the SOP that I used specifically to take this trade. Now, a couple of things to understand. When you come into a session, right, the only thing you need is levels and volume. This is before the market opens. This is before 9:30 Eastern. Identify where the volume is highest and lowest. And so volume is your best friend, right? How many times have you taken a trade and you ended up in chop, or you won a trade and then you lost a trade, or you lost 3 trades in a row and now you're in a drawdown? How many times have you been through that, right? at the end of this video, I'm going to show you how you can avoid those market conditions and how you can trade in those market conditions to maximize your wins and minimize your losses, which is basically the game that we're playing. So when we identify volume, or when I identified volume on the, what would that be, the 11th of May, what I was looking at is this, right? So I use market profile. Now, specifically with market profile, I am interested. So this was Monday, right? Monday, the 11th, right? And so this volume profile here corresponds to Friday's activity, or the previous day's activity. Now, why is the previous day's activity important to me? The reason it's important to me is because this blue region here, this represents the top 70% of the volume. So if you are a London-based trader or a New York session-based trader, it doesn't matter what session you're trading, right? The only thing that matters is that you are trading where the volume is highest. So in simple terms, right? So for those who are wondering how I got this indicator, let me just break this down. So this is the MP/TPO indicator. So it's visible only on the 15-minute time frame where my key levels are, right? And these are my settings, right? Feel free to pause and copy, right? MPO/TPO. So here is the volume profile, and here are my levels. So before 9:30, between 9 and 9:30 Eastern, you want to have your pre-market levels defined, and you want to define them with respect to the volume, right? So I had done that. So this first half an hour is very important because it basically tells you where you want to trade from, where you don't want to trade from. Okay, so looking at this now, we were also pretty much at the POC from Friday. Now this represents high volume, and high volume is where you want to be trading. All right. So if you look at this level down here, this is going to be key level 3, key level 2, key level 1. I do not want to be trading here, right? This is the bottom 30% of the volume, right? Here we can expect a lot of chop. So if price came down to 3, I would be a lot more cautious, or I might even walk away. Especially after 1045, 1050, I'll probably walk away from this range, right? I don't want to be trading in areas of low volume, right? So this is one of the reasons why the trade was so good, right? This is one of the reasons it played out. This is why we had momentum, because the volume was highest. And it's the easiest thing to do, right? Switch on the volume profile and just trade levels or trade entries where the volume is highest. This is very important when it comes to the breakout blueprint, which we're going to get into now. So moving on, we're going to the second part of the session, which is the first 30-minute window. So this is between 9:30 and 10, right? So between 9:30 and 10, I have some rules. So if we're trading in a high volume area, I'm only allowed to trade after 9:45. If we're trading in a low volume area, I am not allowed to trade at all between 9:30 and 10, because from the data that I've experienced, and you've probably experienced this too, when you're trading in areas of low volume, here, for example, right, the market chops. Right, so look at this, for example, right? Let's go to Thursday, the 7th of May, right? Look at this chop. This chop lasted probably 3-4 hours. Look at where we were with the volume, right? The volume here was low. This was a low volume area. It's not a low volume node, right? You don't want to overcomplicate concepts. So if you're trading at work and you're looking to trade the New York session or even the London session, the last thing you want to do is add more things to your system. Add more things to your SOPs. Notice how my SOP pre-market plan had 2 things, levels and volume. That's all I'm interested in, levels and volume. That's all you need, right? Nothing else is important, nothing else is needed. Now from there, what we want to try and understand is we're at an area of high volume, all right? So we've basically ticked both of our boxes, tick, tick, right? We've looked at the market profile, we've understood key levels. Now from here, we're in an area of high volume. So the only trade I took was after 9:45, right? So this is where we're now going to go into the Bolt breakout blueprint, right? Let's get into it. So what we can see here now, we're going to start breaking down the session. So this is one thing where if you're trading a job or you have some kind of business where you have other things going on and you don't have 100% attention on the charts and you still want to trade and scalp, this is how you do it. You want to break your sessions down into 1 SOPs and 2 30-minute windows, 9:30 to 10, 10 to 10:30, 10:30 to 11, and you want to be done by 10:45/11, right? The best trades will happen before 10:45, right? Or latest 11 o'clock. So let's kind of break this down. So from here we had 9:30 here. This was 9:30 and this was 10 o'clock, right? So 10 o'clock was somewhere around here. This was 10 o'clock. So this is the first session, if you like, right? This is the first 30-minute window. Now, from here, what we can see is a break. We can see a break above our zone. This is step one. Now, once you've established the break, your job is to then understand we need a retest. And so the SOP that I use here is very simple. Break, right? This is the break. In fact, what I make traders do here at Price Action Labs is I will make them fill out a form, right? So this is the best way to kind of incorporate SOPs into your trading. So if we look here, for example, right, what we're looking at is the Bolt breakout blueprint. So there's obviously 4 steps. Break, optimal retest, liquidity absorption, and then you pull the trigger. And notice how each of those individual aspects of the system is graded out of 5. And you need an overall entry criteria of 20, right? If you are trading a full-time job, and I keep stressing this, you want to have systems, not chasing trades. So if you struggle with any psychology, have systems in place and grade each part of your system to make sure it matches what your strategy actually says. So for me, I'm a break retest trader or breakout trader. I want to define my levels with volume and then trade the breakouts. And this is how I do it. So step 1 is we are looking for a break. So this is the break here. That's kind of 1. So for me to establish a break, I want to see 2 things. I need to see at least 2 candles and I want to see a body break. So from here we have, more than 2 candles and we obviously have a body break. So that's tick, tick. So for me, this is a very clean break. Very important to understand. This is a clean break in the markets, okay? So what we can do is we can go to our SOP and we can actually put 5 here. It's 5 out of 5. So break, we actually need to look for a break line, which is something I'm going to look at now. So how I determine my break line, because I get questions about this in the community as well. So I will look for the first candle that escaped the zone, either bullish or bearish. So in this case, we had a bullish break. And so my break line will be the top of this candle here. This will be my break line. Now, this break line is going to be very important later on in the session. So let me remove these. This break line is going to be super important, and you're going to see the concept of it. So this is the first step, right? You want to see a clean break, right? You want to see a break line, and you want to see at least 2 candles. That's all you're looking for. Right, so once you have a key level, this is the only thing you are looking for. From here, once you've seen a break, the next thing we're looking for is an optimal retest. And so what do I mean by an optimal retest and how do we see an optimal retest? So an optimal retest has 2 basic things, right? So what we're going to do is we're going to wait for the market to show us that, right? And this is a lesson about, trading as a whole. There we go. So here's where we start looking for an optimal retest. And so an optimal retest for me has to tick 2 things, right? It needs to be at least 2 candles, right? So at least, let me just type this down, at least 2 candles, right? It has to be at least 2 candles. Let me put that bigger. And the second thing is it needs to come into at least 50% of the zone, right? So at least 50% of the zone. At least 50% of the zone. Now, the trick with this is what you want to understand is that here we had more than 2 candles, right? So we had 1, 2, 3. And what we can see here is price engulfs the entire level. So it's at least 50% and it's at least 2 candles. Quick note, if price comes outside with a wick, that's perfectly fine. And I'm going to show you why that's perfectly fine in the next step. But for the sake of the optimal retest, this is a 5 out of 5 optimal retest, right? So if we go to our SOP over here, what you'll see is we had a break line, which was 5. We have a quality pullback into the level that's also 5. So right now we're, 5 and 5, which is pretty good. This is why it's an A+ setup, right? A+ setups come from good processes. Good processes can be measured, and measured processes helps you get results. It's that simple. And this is how you kind of refine and iterate over time, because when you journal, if you actually have data-backed decision making, it's a lot easier to journal because you can just look at the numbers and say this setup was 15 out of 20, this setup was 20 out of 20. What was the difference? Oh, okay, this and this. Okay, so another thing here, right? So let's just take a look at where we are now, because my system is very simple and I want you to understand how simple the system is. Yes, you need to get good at levels and volume and all this stuff, but when it comes to execution, it's very simple if you follow the process. So what we see here is we have our break line. Now, remember I told you about break line? This is where break line becomes very important, because we have a break, we have an optimal retest coming in the zone, and in this region inside the level, we actually move on to step 3, which is L. This is where the order flow comes in, right? So what I often say is that if you don't do the L will get you, right? You have to look at the liquidity and where it is being absorbed. This is the most important thing. So liquidity absorption step 3 is evidence of opposing orders being absorbed, right? This is where most traders go wrong, and they don't need to. So let me quickly break this down. Why did I go long? So here was my execution. So I went long, and this was my execution here. So let's really break this down step by step, right? I've got a lot to say about this, so let's break this down. Now, if we go to the charts and we actually get both of them up next to each other, you know, let's make this big screen. Here we are. We have the same exact key level, but now I'm going to be breaking down my thought process, my pattern, right? What I was thinking. Why was this an A+ setup? This is the L. This is the liquidity absorption. So what we can see here is market gives us a big red candle coming into the zone. Massive red candle. Now, if you watch any of my previous videos, what you'll see here is inside the red candle, we have lots of negative or red rows. What do the red rows mean? Well, they mean aggressive selling. So if we kind of zoom into the rows here at the bottom, let's take this one, for example, 755 for 409, right? There are more aggressive sell orders than buy orders. Right, so what we can see here is a lot of sell side liquidity, or a lot of aggressive sellers not being able to break below the zone. And this is what I'm saying. This candle here, this candle here was very telling. Right, so my execution came at 74.30, right? 23 contracts MES. Here was the setup, and this is why the setup was A+, because of the liquidity absorption. This is the confirmation you're looking for before you pull the trigger. Before you pull the trigger, this is the confirmation. You have a level, you had a break, you had an optimal retest. This is now the liquidity absorption. And so think of it this way, right? I want you to think of liquidity as, you know, you can't go to a chart and try and read liquidity without actually reading it, right? So you need to have some kind of footprint chart. It can be depth of market, order flow, footprint charts. It can be anything, but you need to have an order flow tool with you if you want to make it in this game. So just here, what we can see, huge red candle, but more importantly, huge amount of aggressive selling. Now, this one candle is what gave me the confirmation to go long. This was my confirmation candle, just like this one here. Now, I want to break down why it was a confirmation candle, right? So what we can see here, green candle, lots of selling. What was going on at the bottom, right? What was this wick, right? What was going on inside this wick? So inside this wick here, so very specifically this wick here, was a huge amount of selling. Right, this is what we call aggressive sellers, everyone, right? This is what we call the absorption. This is the liquidity absorption. So when we go back to our checklist over here, we have break, optimal retest, liquidity absorption. Smart money absorbs, weak hands out. So in other words, who is weak? Is it the sellers? Is it the buyers? Always ask yourself that question. What side of the liquidity is being absorbed? That's what the L stands for, liquidity absorption. So in this case, it is really the sellers. Right? And let me tell you why it's the sellers. Because we had a huge amount of selling over here, but market broke higher. In fact, market broke above our break line from step 1. Right? So this was step 1. This here was step 1. This was the break. Right? Then we waited for price to come into the level. Quick note about this. We had the break at 9:44, right? And we didn't come back in until 10:31, right? That is 47 minutes. It's worth even writing that down. That's a 47-minute wait. Sometimes the wait doesn't take that long, right? Sometimes it takes maybe 5 minutes, 10 minutes, sometimes 1 minute, right? Sometimes you get this and then bosh. We didn't get that. This to me is not an entry. I want to see a proper retest, right? Remember, optimal retest. Price returns to the level for confirmation, right? So this is not the move. This is the move, okay? I waited 47 minutes for this trade, right? Just bear that in mind. Now from here, why is this a liquidity absorption? So let me ask you a question, right? If there are lots of aggressive sellers here, but market breaks higher above our break line, were all of these aggressive sellers successful? Were they able to break below the zone, right? Let's just take a look at this, right? Look at this. Were any of these sellers able to break below the zone? No, in fact, they broke above the zone and they broke above our break line. This is where we pull the trigger. So liquidity absorption We then pull the trigger after we see liquidity absorption. Very important to get that right, okay? So, and that explains the confirmation, or that explains the edge, right? So I went in 74.30 and risked, you know, about a 1 to 1.8 risk reward, right? So fairly happy with that trade, right? And of course my execution would have been here, right? Well, 74.30, so roughly here, stops roughly at this area, and I was targeting the imbalance over here, right? 1 minute inefficiency. There you go, just targeting here. So that's roughly a 1 to 8, 1 to 1.8. There you go. And I closed out majority of trade. I closed majority of the position here, okay? So I just wanted to break that down. I wanted to go through the entire bolt breakout blueprint, how I grade my setups. Now, another thing coming back to this is, you know, BOLT, so liquidity absorption, and then I pull the trigger. So from an SOP checklist standpoint, right, what I saw, or if I were to grade my setup now, there was a perfect break line with a body. There was an optimal retest, so that would be 5 and 5. The liquidity absorption to me was very clear, right? We had a very clear liquidity absorption, sellers were trapped, and then I pulled the trigger at the break line. So this would be a 20 out of 20 bolt breakout blueprint, right? And I want you to kind of take this and kind of maybe adjust it, make it your own, try and use a similar-ish approach, but definitely have a 4-step system or a 3-step system or a 5-step system that you can use to grade all of your setups. So if you found that useful, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.